Well, look, our business is being impacted across the U.S. and all the other markets that we operate in that are experiencing the challenges of dealing with this virus. But we know we have a very important role to play in the communities we serve around the world. Our employees, our franchisees take tremendous pride in giving our customers safe access to the affordable food they love. And given our footprint, over 50,000 restaurants around the world and a big presence in Asia, where the virus has already impacted the market, and we've had this great ability to leverage the learnings from that market and take those to the other markets as they start to experiencing a little bit of this crisis. So we are open for business all around the world. 85% of our stores are operating today, the vast majority of our markets. But our business looks different to your point, to your question. We have more delivery, more drive-through, more carry-out type business. And in fact, we're introducing new ways of using our brands that didn't exist before. Joey Watt, the great CEO of our Yum China brand, and her team, they went ahead and developed a new contactless delivery process whereby a customer can go ahead and order through an app, take care of all the payment, and when the food shows up at the customer's door, they're notified by the driver, and then the driver moves away so that there's no contact between the driver and the customer. So a great innovation has been adopted by all the restaurants around the world in our system and in the restaurant industry. So the business is certainly changing, and it's our job in good times and bad to change with the challenges of the business.
Let's talk about the use of cash. That was the other big announcement that investors paid attention to today. Suspending the buyback program, borrowing another $525 million on the revolving credit line. Bring us up to speed on the strength, on the health of your balance sheet and what position you find yourself in right now.
Well, look, we have over $1 billion of cash now. Certainly we're in a good position, but we want to take an abundance of caution as we manage through the challenges of this situation. So our number one priority is taking care of our employees, our franchisees, and our customers, ensuring that safe experience for them. So if that means providing some assistance at this time, that's what we're going to do. And that's why you see us, out of an abundance of caution, suspending buyback so that we can do things like we just recently did in the United States, which is provide a grace period for our franchisees on their royalties or suspend capital investments for them so that they can have the cash to get through this crisis, continuing to serve their communities, to continuing to keep their employees employed, and which is very important for the economy and important for our business. So all of that is being done out of an abundance of caution to just make sure we're set up to ride out this crisis in whatever direction it takes.
David, to what extent have higher takeaways and deliveries offset lower footfall in the restaurants themselves? Gauge it for us in terms of scale.
Well, our business has historically been much more reliant on delivery, drive-through, and carry-out than it has been dine-in. So we come into this with a better business model to weather this kind of storm. What we're seeing is no surprise. Intuitively, you would expect it, that customers are more interested in delivery. One of the interesting things that's come up, though, is they are actually more interested in carry-out as well, and the carry-out business is growing in parts of our business. So we're making sure that we're set up in those channels to make sure we can serve them in the safest way possible. But, in the Pizza Hut business, where we have a number of stores that are really heavily reliant on dine-in, those are some of the stores, unfortunately, that closed during this time in markets around the world because we're not seeing the dine-in business, whether it's in the U.S. Where it's quickly gone away, or the U.K. where all dine-in restaurants have closed. So it's a big change, a big shift in our business. But we've always been in the business of reacting to what customers want. There's a period of time right now where customers are looking for something different than they ever have. It's this contactless way to access our brands. But, there was a time when the drive-through was introduced into the restaurant industry, and that was a way to react to a different way customers wanted to react to brands. We will constantly be evolving our brands to react to consumers' needs.
What happens, David, to the workers in the stores that have had to temporarily close because they're in states that may be shut down or otherwise? We're just trying to gauge how bad the unemployment numbers are going to look in this country. And for your industry, restaurants, I know the small restaurants in New York are extremely worried and starting to shut down. I'm just wondering what it means for bigger or more
people actually started as frontline workers in an hourly position in our restaurants and grew to own 1, 2, 10, 15 restaurants. Those are the people that are desperately trying to make sure that they can take care of their employees during this time. And that's why the government aid will help greatly in that regard.
David Gibbs, thank you for phoning in. Keep us posted.